This is Back Road, the Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Road to Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on a Wednesday afternoon. I am Cesar Delgado. I am your host for today on Back Roads of Illinois. I am joining with Shane Hanoff from Logic Consultant on the commodities markets and Kyle Bumsted from Allendale Inc. about the cattle markets with these prices for right now. Otherwise, we were talking about the commodities markets with Shane Hanoff from Logic Consultant on Back Roads of Illinois. We'll talk about the planting progress in Iowa and livestock sector in the markets with Shane Hanoff from Logic Consultant in Iowa. How are you? Welcome to the show, Shane.
Thanks, Caesar. I'm doing pretty good. As you mentioned, I'm with Logic Ag Marketing. We're based out of Northwest Iowa.
Shane, let's discuss about the balance sheet on Monday from the Department of Agriculture. What is your thoughts on it?
Sure. So Monday was a little bit of a surprise. I thought the USDA was a little more aggressive than most thought they would be, especially in regards to the demand portion of the balance sheet, specifically corn exports. There's a lot of global competition, right now in this tariff talks. No one really knows how exports are going to be treated, but they've been pretty good. Stocks got tighter year over year, but apparently it wasn't tight enough to really scare this market into doing anything crazy. When I saw the numbers out at 11 o'clock, I thought, wow, this is going to be a bullish report. And the market really was stagnant, up until today. And we really didn't do much today. We closed on either side of green there, and so demand's going to have to prove itself to line up with the balance sheet that the USDA put out on Monday.
What is your position on the beans demand for right now, Shane?
Sure. I think the bean demand has softened up a little. In our general area, we've got some processors, and they seem to have been bidding a little bit more. Soy oil stocks are tight, and so that makes sense. But for the most part, basis isn't really showing that there's a ton of local demand, and I think that's what's probably keeping this market from rallying a little bit more than it has.
How is the fundamentals on the cash grains markets, especially with these prices from Chicago?
Sure, that's a good question. As I kind of mentioned on the bean side, the cash markets are steady, not really bullish, not really bearish. The basis levels are starting to firm in certain areas. It just depends on the corn side where there's processors. It seems to be garnering some movement. It's my opinion that producers let go of a lot more grain early on in the season or even right after harvest, just because we saw a lot of people change their harvest policies, and it made more sense to come in and either sell those and just get rid of them. As it turns out, that was the right move with the futures doing what they have done. But bottom line is the futures market struggling due to two things: favorable weather and really, really fast planting. We've proven we can get this crop in a hurry.
Can you explain to our audience that how is the technical aspects on the beans markets?
Sure. From a technical perspective on beans, we've broken through a lot of our technical resistance that had been kind of keeping us held down. So if we want to take a peek at July beans, it's my opinion that we've got some room to run here from a technical perspective.
Can you tell us that how is the planting progress in Northwest Iowa?
Well, Northwest Iowa is off to a blazing fast start here. As I mentioned, most farmers are wrapped up with corn. They're pushing hard to get soybeans done. There's a little chance of showers here tonight. I'm not expecting much, maybe a couple of tenths. And then as we look to Monday, Tuesday of next week, that chance of showers grows a little bit more.
How about in southern Minnesota?
Yes, southern Minnesota is a lot of the same. We actually had some growers that I talked to up there late last week, and they missed out on some of the rain that we got 2 weeks ago. And so, by and large, they've been wrapped up for 5 or 6 days in southern Minnesota.
I know that you're offering to the livestock producer about LRP, but what do you recommend for the premium risk on these prices for right now?
It's a good question. This meeting's pretty timely, Caesar. As we look at these markets today, we had a key reversal in fed cattle and feeder cattle markets today. We saw fed cattle $3 off the highs, feeder cattle, $5.50 off the high, and so as a company, we're actually rallying our troops this afternoon, and we're going to get in touch with the majority of our cattle producers and recommend that they put some sort of coverage on tonight, likely through the use of LRP. It's a government subsidized product. It makes it a very attractive product. And, today we just saw all time highs pushed before correcting off of them. So if we're going to make some hedges and be wrong, this isn't a bad place to do it.
We saw the August feeder is up at 302. Do you have any concerns about these cattle markets?
Yeah, as I kind of shared, the price action today in these markets, both feed and fed cattle and feeder cattle, were not. They don't leave me with a warm and fuzzy feeling. And so, we're going to be actively seeking out some sort of a risk management strategy with a lot of our producers tonight.
Do you have any final thoughts about the corn acreage for this spring?
Yeah, so if we look at the planning progress and just in general, I mentioned that it's off to a very, very fast pace in northwest Iowa and southern Minnesota. And that can be said for a lot of the places. You get into the Dakotas and they are way ahead of schedule. To me, that probably lends itself pretty friendly to corn acres, not so friendly to the corn market. And I think that's why we're seeing the weight here. Could we add another couple 100,000 acres of corn right here? I sure think we could, based upon this planting progress. You know, um, it's just tough to tell. Some farmers already have their mind made up, and that's the way it's going to be. But I think with this, good seed bed, good quality, it's only May 15th or May 14th, and the planting progress is there. So I can see a little bit of a shift towards corn.
Thanks, Shane.
Absolutely. Thanks for having me on.
We've been talking to Shane hanoff from Logic Consultant on back roads of Illinois. We'll have a conversation about the livestock markets on today's podcast with Kyle Bumsted from Allendale Incorporated. Here's Kyle Bumsted. Hey, Kyle, how are you?
I'm good, Caesar. How are you?
Kyle, how feel about the cattle markets for right now with the fundamentals from this high?
That's a very good question. A market can't go make new contract highs, new all-time highs, new lifetime highs every day. And I think today was just one of those days. But we had some big moves, some big ranges in these cattle markets here today. Case in point, when we look at this August feeder cattle market, we traded a range of $6.85 or $6.35 from high to low today, closing down 402 at 301.97. And the August live cattle, a $6.02 range from high to low today, and a $2.25 loss at 209.37. So it'll be very interesting how we finish up these feeder cattle here this week. We're losing some of the northern sales out of our feeder cattle index, and we've got a lot of Southern Plains direct sales that are going to be going direct to feed yards here later this week as well too. And when we look at those numbers, those are statistically or historically, those are a little bit tough on the index. Those cattle sell a little bit cheaper, and that could drag the index down. And I say that because May feeder cattle expire on the 22nd, which is 8 days away. They expire 1 week from tomorrow. Be Thursday the 22nd at noon. So it'll be very interesting how they settle those out. And as far as what we have for sales coming in here to finish out this week and next week.
Do you have any concerns this is getting down quickly as possible on the feeder chart?
Concerns on the feeder chart, not right now, although some are going to say it's an outside day lower and a key reversal, which it is. I will not discount that fact, but we've seen this happen several times here on this last rally. So I don't know as I want to read too much into it just yet. When I look at this August feeder cattle contract, that's the lead month, the lead contract. I'm going to get concerned if we start making new 4-day lows. So if we take out and close below 299.12, that's going to be a red flag for me. And then also, as far as the weekly close goes, if we close below 295.95, that's going to be very interesting as well too. And a lot of folks said, well, we won't go that far yet this week, which maybe we won't, maybe we will. I'm not sure, but that would be an outside week lower if we close below that 295.95 area. That'd be an outside week lower, something I definitely would want to watch, especially after gapping higher this week, or starting off the week with the news out of they're closing the Mexican border again for New World screwworm. But we've seen that headline 2 or 3, maybe 4 times here since they started that at the end of last year. So to read into those headlines, it's like, yeah, well, another headline, I guess. We'll see what happens with it. Gapping higher, and then if we were to close below that, below last week's low, that would look a little bit ugly on a weekly chart.
We will see, Kyle.
That's right.
Do you have any concerns about the consumer budget is pretty tight for right now?
Yeah, I do have some concerns about that, especially when I go to the grocery store and I'm walking by the meat counter. Case in point, I was in an urban area last night, walked through a large warehouse grocery store chain, and there was a lot of beef laying at the counter. But again, it wasn't a weekend either, so it's tough to really say how much really moves during the week. But I'm concerned because a lot of folks, when you see the amount of credit card debt that's piling up out there, and also looking at like defaults on car loans, car payments, defaults on house loans and house payments, things like that. They are starting to creep up there. But there is maybe some light at the end of the tunnel. I don't know. They're looking for maybe an interest rate cut, maybe in September. So there could be something there that helps the consumer out. But we've got to get to September, and we've got to get to those. We've got to get to these holidays here. So we're looking here at the 14th of May, and we're procuring right now for a Memorial Day. What hasn't been procured? There's going to be maybe some quick, small, some short-term deals here, maybe prop up boxes early next week a little bit, just to try to get some of that last Memorial Day stuff in here. And then we're looking at Juneteenth. That's during the week this year, and then we got the 4th of July as far as summer holidays go. So won't be too long. We'll be staring at the dog days of summer here when demand kind of slows down for beef. So we do need to keep our eyes on that as the seasonal does kind of slow down a little bit, and also. We are putting out a really good product here to the consumer right now too, and they've got a good taste for it. We've got heavier carcasses, and our carcasses are grading a lot better, and the meat tastes a lot better. So that's a good thing as well. Keep that flavor out there for them, but the price definitely does concern me, Caesar.
What is your thoughts on the R word as an economic downturn in general for the future, Kyle?
That's a good question. When you look at the stock markets and stock indexes, it doesn't really signal an economic downturn, but it's always kind of on the back of your mind that it's there. You got crude oil prices. They've been jumping around here a lot lately. When I look at this July crude oil, That's kind of an indicator that I like to use here. Last week we made a low of 54.95 in July crude, and we took out the previous week's high there of 57.93 or 57.83 with this week's high of a 63.44. So I mean, that's looking good here as far as crude oil goes, and that's also a consumer something for demand that I look at too. We're right on the we're right in the early stages of the summer driving season as well. So that's something that I'm keeping a close eye on as well too, as far as crude oil prices and gasoline prices. So if crude oil goes up, those gasoline prices could pinch folks at the pump just a little bit, but that remains to be seen right now too.
What is your final thoughts on the cattle markets for the future?
Yep. Final thoughts here. We're at record highs, the all-time highs. Volatility is very cheap in the options. So if you want to trade a bias one way or the other, puts are cheap, calls are cheap. Not a trade recommendation. Just go look at it yourself. But the volatility level is very cheap, both sides. So that's something to look at if you want to trade a bias. If you want to be long, calls are cheap. Volatility is cheap in the calls. And if you want to be short, volatility is cheap in the puts too. So it's something you can look at both sides of.
Do you recommend for getting LRP?
That's on a case-by-case basis. I'm not sure that that's going to be the thing to do when you get a market that's moving as much as it is. I'd probably stick to the put side of things, because when you look at LRPs, especially when you get into expiration, I've seen a lot of people really thinking they've got really big money made on these LRPs, and boy, it's really going to go. And then all of a sudden the index changes here at expiration. I've seen that happen dozens of times on these expirations with LRPs. So, yeah, they do their job, but they're not cheap either. LRPs are expensive. So, a lot of times you can buy a put just about as cheap, if not cheaper, and have some more flexibility with that put option as well, too.
Thanks, Kyle.
You bet. Thank you, sir.
This is Kyle Bumsted from Allendale Inc. on today's program. Thanks to Shane Hanoff from Logic Consultant and Kyle Bumsted from Allendale Incorporated. This has been Back Roads of Illinois. I am Cesar Delgado. You have a good day.